Hey my people, Z is here. Z speculates for everyone new. I'm Z speculates who help traders on their break-even stage, or if they're still losing, to become profitable within 12 months with my one-on-one mentorship program. But ignore this today. For now, we're gonna discuss a very important topic. Yes, it will be about CRT because 90% of the traders who use CRT, they just use it as something fancy, right? I mean, it's a very good concept, and these are all the topics that I'm gonna cover in this video. And at the end, I am gonna give some examples of what I mean, what you to look for, and of course, the reason for the video is because I want you to understand what's going on and to use everything to your own advantage. So, starting CRT logic. This is just a quote. Choosing the right CRT to trade, meaning choosing the right candle one as your range for you to milk from high to 50% and to opposing end, right? This is what I want you to learn, how to trade candle 2, candle 1, how to milk it, more importantly, how to choose the perfect one and not any candle. Always and always remember the color of the candle. Of course, if you're bullish, a bearish candle is a good range, but it's only good if it's in the right concept, right? In the right scenario. Or you always need a key level or the order flow. And because the bearish candle in bullish order flow is perfect for buying if it's offered. Remember, if it's offered, not just because it's a bearish candle, right? Why? Because a bearish candle in bullish market is usually getting engulfed and used as a key level, like bullish order block, right? Perfect. So starting with what is candle 1. This is just a quote as I said. So the first thing that I'm going to talk about is this. Then we are going to discuss how to choose the perfect candle 1, the candle 2 method that no one talked about, and you will understand how everything here works in, if I can use the word sequence, is perfect. Now going to what is candle 1. Candle 1, like from Romeo TPT, you can say it's the accumulation, but accept it like the range. No accumulation, right? The accumulation means consolidation, right? Accumulating orders on both sides to make turtle soup and form a dealing range. But this is a specific pattern because you can, and you will see most of the times, big expansion candles being your candle 1, right? Why it's not just a small candle? Because CRT is logic. It's not a color. It's not a single candle. It's a fucking logic. Now, going to explain it. CRT is your range. Your range where even inside a retracement towards expansion, you can milk both sides of the market by using multiple things. First, to be, if I can say, to put the odds on your side, you always trade with order flow. Second, you need a key level. Now, that doesn't matter if you're trading retracement or expansion. You always need a key level that will start the retracement, meaning if the market is bearish, in this case, in this example, if the market is bearish, this move up as a retracement will be sponsored by a key level. Something have to start that retracement. Okay? So you always need that. After the key level, you need a candle 1 to form. And that candle 1, you understand how to know if the candle 1 is already formed and how you can use it to your advantage as a target and a stop loss for candle 2 and like that. Going through it, candle 1 is your range. That's it. You use it with order flow, you use it with key levels, and you don't pattern trade it. That's it. Changing from this to topic, how to choose the perfect candle one. Many people have talked about just whenever there is a key level, the candle that immediately taps it, and the next candle is your candle 2, and you trade candle 2 soup on 1, right? Okay, yeah, it can happen in some cases, but that's not the logic. Because what if you get another dump to, let's say, consequent encroachment of the order block, the 50% of the order block, and this is your range. Now the correct range, right? It's a logic that, if I can say it like that, to make it very easy, I will use simple words. Candle 2 confirms candle 1. That's it. Candle 2 confirms candle number 1. And this is the most important part. You have to understand the profile of candle 2 in order you to milk the range of candle 1 inside candle 3, or if your entry is in candle 2, right? So imagine this is a potential bearish CRT. A potential bearish CRT, right? Yes, we are around the key level. Yes, the order flow is bearish. So we are on the correct side of the market. And we have a candle which is very close to the key level, or already tapped the key level, right? And now you expect a sell above it. Just like a dump 3 candle pattern, that's it. This is what 90% of the people do. And the perfect way to get the perfect candle 1 is confirmed in the next candle. Imagine now, this is candle 2 opening, candle 2 closing price. Now, if candle 2 makes something like this, you cannot expect shorts, right? You cannot expect shorts. First, because the move was sponsored by the 50% of the range, and there is no shift. This is just going up, meaning this candle 2 will not be the turtle soup, right? And even this will be turtle soup or broken out of, right? Depending what, again, the next candle do. Now, what you have to understand, this candle 2 confirms candle 1. It's a logic which should happen like that. You can trade two ways of a candle, either from 50% continuation, or full soup to continue, or you can trade from opening outside of the key level, outside of the range, sorry, into a key level to turn you back into the range. This is how you can trade it. Imagine this candle 1, you have candle 2 like this or like this. Which one looks for reversal, right? This or this? This, right? Because you're playing with key level outside of the range, which can sponsor a move to the other side. Now, what is important to look for in candle 2 to confirm this is candle 1? You will always see a true flip, true market structure shift. What means that? You see, okay, let's make it a little bit like this. You see a low, this specific low that I'm drawing right now, that took a high and a high, being displaced below, and the market can offer liquidity pool and chop at the end of the candle. What is happening right now? The market is open range high, flip of two things now. Pay attention. You're flipping the opening price. Meaning from bullish, you have now a potential reversal, doji candle or something like that. But the important stuff is what happens below the low that took the high. This is the low that made the move up, right? So to confirm candle 1, you have to see a true shift in candle 2, meaning displacement below. Displacement is equals a fair value gap, meaning the price is willing to expand down, meaning I want to go. And you engineer liquidity like a high that took a low here, high that took this low for the next candle. Now, this piece of price action is confirming my range high, my 50%, and my range low. And if the order flow, if you are following the order flow, 90% of the time, the opposing end will be met again. Not only 50%, but this. Why? Because the market will reject highs and will target lows. And this is a liquidity pool. So if the order flow is correct, the opposing end is guaranteed. And watch for SMTs always. SMT can tell you a simple close. That's it. So we just covered that. No more, no less. I don't have to say anything more. This is the way to confirm the correct range as a CRT. If you're using CRT. Imagine this is weekly candle and you dissect the weekly on the 4 hour and you see a 4 hour low that took the high getting flipped and chop. What do you expect next week? You have liquidity pool, you have key level. You can expect to open turtle soup into the key level, and that's it. This is how you trade candle 3. Candle 3 is OTE. OT happens after true shift. That's it. Sometimes you can have a week which is choppy, right? Choppy week, right at the end to engineer more liquidity. But what you have to trade is the OT into the key level down to this. How do you trade the reversal? Expansion from the opening price towards the key level to drive down. Open rally, liquidity, key level, entry, dump. That's it. This is how you do it. This is the correct way, and I don't care what everyone says. Go and see it, even I will show you. Now going on to the next topic. Next topic, candle 2 method. What is the candle 2 method? Candle 2's method is very simple. Whenever you see this happening, candle 2 method is how to enter in candle 2, right? To enter within that, your entry will possibly come inside the same candle, meaning from open to range to soup to flip, the opening price, the low that took the high with fair value gap, and the next high that forms is rebalancing the gap, is going into the breaker and is dumping below, and then price again starts chopping around, right? Now the price is fully rebalanced, right? Candle 3 should not have any intention to go here because the key level is tested, the gap is rebalanced, so candle 3's work will be immediate expansion down. Very small soup onto high that took a low into the key level, which might be here, to drop down. That's candle 2 method. That's your entry. If it's offered, you do not force things like this. You wait for things like this to occur in order to milk them out. And this is the only way that you can do something with that. and I know you will, because I know that you trust me, and even I will show you examples. But before that, now this is done. That's candle 2 method. No more, no less, no yapping around. Entry in candle 3. This is how you should trade if you want to be safe. Only this. Let me now remove the gap. Like this, imagine. Chopping around till the end of the candle. Candle 3. The only and best way to trade candle 3, is this exact, call it, let's say, so-called pattern, right? When the candle 2 simply confirms candle 1, meaning you have the range already. You have it's 50%. You have a key level as a breaker, and now the important part, the OTE is 90% of the time ordered block entry. OTE for me is order block entry. That's how you use your model 1, which will be in candle 2. Model 1 inside candle 1 is fake 1. Model 1 should be in candle 2 in the manipulation, and candle 3 will go into that, and then you engage, because you would have liquidity, open, rally, key level, dump. The price is already flipped. The market have the intention to go down, and we have engineered liquidity. Now we soup it with, speed is confusing, right? When the week opens and we do this, I mean, from Monday we do this, this, and you tap a key level. What's next move? Down, right? Because whenever, as a power of 3, whenever a candle makes open high, you never ever look to long. You only long open low, and you only short open high. That's it. You cannot short a candle that already dumped into the key level. Why? Because you will get faded. Especially if you are anticipating candle 2 into a key level, right? You will get faded, and then candle 3 will give the correct entry into the key level. This is the whole full logic behind candle ranges. And as I promised, I'm straightly jumping into real-time examples, and I'm giving you my outlook now for the incoming week. Let me show you. We are extremely bullish on Nasdaq. First, yeah, it will be for Nasdaq for now. This is a potential candle range that I want to trade, but I do not want to fade the higher time frame order flow. So my only target will be 50%. Only this. Now let me remove the blue line. So now, how do I know if this is the range? Let's see the profile on the weekly candle on 1 hour and 4 hour. The candle was open, range dump, high, into the end of the week. This is a low that took the high, flipped. See the 4 hour, it's very beautiful. Flipped with fair value gap. And another important thing, to confirm it, you need at least 1-2 closures, and the more are giving you the confirmation. Now I have a low that took the high, getting flipped. I have a clear model number 1, and what I'm expecting next week. I have a potential liquidity pool below a key level. And where did 50% go of that? Let me find the week now, 1 moment. Okay, the week is like this. 50% is here. My main target is this. So my setup for next week, marking from opening to closing price again. is I expect Monday, sorry, let me get it here, Monday to make this, a little soup on this lows, so we can be able to start retracement. Tuesday, maybe high of week. The high of week will only be confirmed with the same low that took the high getting flipped. If we do this on Tuesday, I expect just expansions all the way down. This is my outlook for Nasdaq. This is the same logic. Look at the low, how the low formed. The profile of the weekly candle, let me show you. We are inside a quarterly key level. This is the quarterly gap, this low, with a monthly profile. Profiling a month. Now, more important for me was, is this a candle one? Right? This is the candle that dumps into the key level. Is it my candle one? Is it my range that I can trade? Is it the correct? Going onto the daily chart, I have a daily change in state of delivery, but more importantly, breaking down the profile on 4 hour and 1 hour. If you see the 1 hour, just a moment, the week, like this is the weekly open. Look at how it looks. The market opens, dump. This is a high that took a low. Why? Because we need to form a breaker. A true breaker is a low that took a high getting flipped, or high that took the low getting flipped. This is the real breaker. Now on 4 hour, it's very clear. See, this exact piece of price action confirming this is a range high, this is a range low, and there is 50%, right? And if you pay attention, the 50% of the range already failed and we closed above it in the same week, right? Meaning this low is formed in discount of the range and will be safe. And now I can use 50% as a key level to continue out from, right? And see, I form a low that took a high, which if I am bullish, I want it to be rejected. Only rejected. Because if we break down, we can confirm that this would be our range, right? At least until the 50%, if we close below. But we just flipped the order flow. And now you expect a soup, you expect a change in state of delivery right here, and you have entry on the new day. And this is SMR, kiss of that soup into the target. I hope it makes sense. Let me show you what's going on EU. My outlook is key level and a range, right? This is my range. Why is it my range? Let's go on weekly chart. See, it's not that clear, right? It's just a high-low chop and we have open rally. Still not clear. Now, what is important? It's what's happening inside of the particular week that engaged with the high. Going on the daily chart. Is there anything clear now on daily that we can look for? Let me explain now. I have drawn liquidity. This is already souped. So I know that I'm bearish. Watching. Is daily chart extremely clear? No. Now you have to understand that you have to profile on the lower time frame. And for me, lower time frame again, just a second. Yes, like that. This is a weekly candle. Yeah, this is my weekly candle, which engaged with that. Now, inside of this candle, I will break it down on 1 hour and 4 hour again. What does the profile say? Open, rally. Engineering liquidity. Turtle soup. And see, this low started the move towards the high, right? So this is my low that took the high. And if you see clearly, we just dump below it in the same week, right here. So I see displacement below, and you can remain bearish. And why I gave you example of engineering liquidity. See, this is the week that tested the breaker, and we was able to expect expansions into even the new week. Do you see this? Just a moment, let me get the oh, it's a 1 week, bro. Yeah, we have open rally key level, expansion, and close. Now here we engage with weekly key level, and we flip the price. Let's see now on 1 hour. Look at this. This flip on the price, right? In this particular week, let me mark now the end of the week. This week flipped. So my next week is the OTE. OTE into the range. What is the range? The previous week. How do we confirm the previous week? By the what happened in the second. This weekly key level caused a shift on the profile on the candle and confirmed that this one is my range low to range high. And once we soup it, now if I go to the 4 hour, you can see how clearly we go to the extreme to create OTE, and we dump. And we have SMT here, and we have a low. This low started the move to take the high, flipped, expansion. I hope it makes sense. This is the only way that you should look at the market. You don't need anything else. That's it. Bitcoin is really interesting, and we'll see what happens. I don't want to give my exact outlook because there's if then. What happens today will determine what's next week. So pay attention, be the best, and if you want to achieve more in trading and you're struggling, I want you to drop me a DM as fast as possible, because currently I have 3 free slots, not free as a prize, but free for people to able to join my one-on-one mentorship. It is for 1 year dedicated studying me, you, personal calls, outlooks, vision, everything. I'm changing your mind and you will become profitable. And if you're ready, if you're serious, I want you to just drop me a DM in Telegram. I will leave a link in the description to direct my DM. And you know this. You are the best, and let's cook. Like the video, share, and subscribe. Thank you for watching. I hope you enjoyed. Use CRT with logic. That is how you win. Be the best.